Welcome back to another video with Melissa West with First Rate Financial, my Celsius, and me, Nicole Swaffer, realtor here in Fairbanks,
and
Alaska.
Celsius.
Yeah, I just actually started drinking these. Mitch drinks them, and so I don't want to go buy Red Bull right now. I haven't gotten over to Costco to buy Red Bull.
Yeah.
So these are now disappearing, and he's getting mad. But that's okay. I digress. That's not the point. Anyways, we're back here today to talk about assets. It's a part of the whole loan process when you have to apply. And we mentioned that there was those 3 pillars when applying when we did the income video. So now I want to talk about assets because that's a huge part of your loan process and what's going to get you qualified or not, honestly.
Where your money come from.
Yeah, not your mattress, I hope.
Yeah. So let's talk about some acceptable forms for down payment and closing costs. And, to use monies in a mortgage, the big flag we want to hang is no cash. No cash. The reason being is there are anti-money laundering laws in place. And so cash is not traceable. We cannot know where it came from. And these are all mortgages backed by our federal government. And so, and so therefore, we're not going to deal with monies that is not sourceable, right? Because it could be from illegal activities. Not that everybody out there who's got cash in places is doing illegal things.
Yes.
But to do a mortgage, you just can't use cash. So mattress money is a nice term that I like to use. But typically, if you've got cash in a safe or something like that, that cannot be used for the transaction.
Yeah, and I know people that they like to live on the cash diet, like we were talking about earlier. So they get paid and then they instantly just withdraw all of their money, and that is not good when you go to look at their bank statements and you're seeing that history of that just getting withdrawn all the time.
Right.
It's not always a good thing. So if you're one of those people, if you can sit tight for 6 months and not withdraw your money from your account, it might help you.
Yeah. So let's talk about what I mean by traceable. So traceable just means it's literally sitting in a bank account. So if there's money in a bank account, it's good to use. When it's not good to use in a bank account is for example, say you take your mattress money and you shove it all into your bank account. Well, now what we've got a problem with is a large deposit showing on your bank statement. So what lender's going to do is they're going to ask for your bank statement. We're going to see this deposit of $10,000 on here, and they're going to say, what's that?
Where did it come from?
Where did that come from, and what is it? And we're going to be left with, a mattress, and and we can't prove that. We can't trace it. We can't prove where that came from or how it got there. So something to think about if you are a person who has a large amount of cash and you're thinking about buying. I would go ahead and deposit it into your bank account and allow it to season. And what I mean by season is let time pass.
Let it marinate.
Let it marinate in there. Let time pass so that when we do pull a bank statement, we don't see that deposit on there anywhere. We've got a clean 30 days. The cash has been sitting there. It doesn't show as a large deposit anywhere, and so we don't have to prove anything. Cool. So your cash is good at that point.
That mattress money. So another thing to think about, if you're not just sitting on money, something that we talked about is the service. I mean, the industry, like restaurants and baristas and people that make tips. Yeah, they have a lot of cash on hand. And I know when I was a barista, we wouldn't always make it to the bank after we would work, and so we would be realistically sitting on, thousands of dollars in our wallets, and then we go deposit, say $2 to $3 grand. But we're making minimum wage technically on our paychecks. So that's not a super great
it's not ideal
situation. So how would you,
my suggestion with that would be to make more frequent deposits.
They do their best.
I know that they're going to do their best. But there is a certain level of a deposit, because you got to think about what is a large deposit. Let's just define that.
What's a large deposit?
What's a large deposit? Well, typically, and with the loan programs, there are kind of different rules around them, but just kind of a rule of thumb to think about
Mm-hmm.
is about, so say you're buying a home for, $300,000, right?
Mm-hmm.
It's a 1% rule. So 1% of the loan amount or the purchase price, it would be $3,000. So what lender and underwriting would be looking for large deposit to qualify would be anything over 3,000.
Okay.
So that's something to think about, is like kind of like what that counts as. It depends on how much house you're buying too.
Yeah.
At the end of the day. And that's not standard. Like, that's not necessarily true. There's some wiggle room and gray room in there also with what we can define as large deposit, and but that's a good rule of thumb to kind of think, the way to think about it. So if you're a person in, bartending or, barista, try to make deposits more frequently, or, if you have enough money in the bank already, leave it alone, live on your cash, that you get, and call it a day, as long as there's enough in there and it's good to go already.
If you need to know if you're already sitting good to buy the house, that's when you talk to Melissa. You don't assume that always talk to the professional to at least know. And if you want to know how your tips can be included into your loan, go reference our video that we did on income, and that will break that down pretty easily for you. But anyway, so bank accounts, that's where we're at.
Yeah. So definitely consult the professional, right? Because we'll tell you how much you need for your down payment. We'll tell you how much you need for closing costs approximately. So that way you kind of have an upfront number, and we can talk about how we can get you there on what that looks like in your bank account. Another form would be a gift.
Because everyone loves a gift of money.
You're allowed to get a present. You're allowed to get a present, potentially. And not always are you allowed to. So sometimes there's an instance where a gift is not allowed. It's more rare, but typically people can get a gift for their down payment.
When would you not be able to get one?
So if it's a multi-family, you're not allowed to get a gift, a second home.
Multifamily as in like it's an investment property? Or
exactly.
Okay. So if I were to go purchase another duplex or something, then I wouldn't be able to use a gift of funds for it, essentially?
If you're not going to live in it, then yes, that's correct.
That's good to know. Didn't know that.
Second homes, you can't get gifts.
Okay.
You can for like a certain amount of it, but you can't get the entire thing as a gift.
Okay. So if you're like, okay.
There's little caveats in there of when you
like second home, as in when you keep your first home and go to purchase a second,
and it's a true second home. That means that you're not buying it as an investment. You're gonna have it for, you're buying a second home in Girdwood to go.
Gotcha. Okay.
A ski place that you go to, or if you're buying in, wherever.
In Hawaii.
Because
we live in Alaska.
That's where I want my second home,
Yeah, don't we all?
If it's not a rental property or an investment property, and you're just buying it to keep and have as a second place.
Gotcha.
So there are some instances with that. Also, receiving a gift sometimes is not allowed for a primary residence, and that has to do with the risk factors of the loan. So getting a gift for your down payment changes the risk. And so sometimes when we run things with Fannie Mae and Freddie Mac, mom and dad, they say no gift. It can happen. I've had that happen where
were they in a bad mood?
They were in a bad mood. They didn't like what we were doing, and they said no. You never know, when that will be, because it does add a layer of risk to the loan, essentially, right? Because it's not your funds. It's not your funds. It's not your skin in the game.
Okay.
Right?
That makes sense.
And so gifts, typically, if it's a primary residence that you're buying, typically they're a yes. But there are cases where that will not be the case. So talk to your loan officer and find out.
Yeah. And I feel like we could talk about gifts in like a whole video, because there's so much that goes into them.
There's nuances with it.
So I'm not going to dive too much more into that. I think we could just make a video about gifts and break it down a little bit more. I know we've talked about it in
Yeah.
previous videos, so I feel like at this point I might as well just make one.
Make a present video. Maybe that's a December one, huh? During Christmas.
That would be cute. Yeah.
You can.
Yeah. And then your other one, you see us keep looking down. We're looking at our notes because we're not like top tier professionals just yet. We don't have note cards.
Yeah, we got a little.
But
script.
yeah, so we have
Okay.
set up. So the next form would be the
A thing of value.
thing of value. That's what you
A
said.
thing of value is of an acceptable form. This is harder.
Okay.
Typically, you're talking about a car, a four-wheeler, a trailer, something that's traceable. That
like
has
a
like
bill of, you would probably
that
attach
you'd
a bill of
have
sale.
you'd have a
with.
bill of sale, but you'd also have proof of ownership of it, and that would be with your title from
title,
the
okay.
DMV. What this doesn't include is a couch.
Yeah.
You know, furniture, yard sale, because how can I prove you owned that? Number one,
Right.
what its value is, you know,
Okay.
so those are the things that you have to have. So you have to have proof of ownership, you have to have proof of value,
Okay.
and then you have to have some sort of bill of sale along with it.
Okay.
So those are the three kind of document-wise things that you need
Okay.
to utilize funds from the sale of a thing of value.
Do you normally see, or are you normally seeing this sale of value item come because they need assets, or because they need to fix their DTI, or they're just like, well, I have this, I can do this? Is there a time where this is more like,
this can be a scramble?
Okay, yeah.
this can be a, oh shit,
Yeah.
we don't have enough funds, we spent our money, you know, we spent our
Yeah.
down payment, what can we do? You know, typically it's, you know, it's not a very typical thing that
Yeah.
happens. It tends to be more of a like last minute kind of a
Okay.
thing of like, how do we get ourselves, you know,
Yeah.
out of a situation? But maybe that's their plan, that they were going to sell this car anyway,
And
you
then use it
know,
for
and use
funds
that for
and-
funds. Like that's totally a thing. And it's totally acceptable so long as we can trace it, you know. That's the important part.
Is making sure everything can be traced back to something.
Traceable. We gotta have documents to show
Mhm.
that you owned it, what its value is, and that a sale happened.
Yeah, even everything. Gifts have to be traced back too. Like when I gave the gift, they have to trace it with me as
Yeah.
well. So,
Yep. Yeah. Gifts are not a sneaky way to
Yeah.
do cash, by the way.
They're not.
You cannot. So whoever gives you a gift, we have to look at their bank account too.
Yeah.
We need to look at their bank statement, and they can't have some.
Sorry, you had to look at my bank statement.
They can't have some big deposit of cash in there
Yeah.
either. You know, that's not a sneaky way to like use your mattress money at the last minute to have somebody gift it to you.
Yeah, it's a lot different now. I feel like everything is. And side note, I'm gonna go on a little side note here, and this is why I feel like the market didn't crash the way everyone thought it was going to, because you guys are so much more nitpicky now with how loans go versus the last time everything like tremendously terrible happened.
Yeah.
Not the same at all, and there was a lot more mortgage fraud to my understanding.
Yeah.
And so
it's
that is one of the reasons, that and the housing sort. That's a whole thing. Anyways, I digress again.
Yeah, it's a lot of diligence now to make sure that these things are legitimate.
Yeah, it's not to be annoying, and it's not for them to like try and get into the crevices of your life. It's just to see the big picture and to understand where everything is coming from, because they run the risk of, they're lending you money. They want to know, is it coming back? You know, is this person like actually going to be able to give me money back, or is this all just kind of a hoax? So that is like something that, you know, I know
it's a way to find fraud.
Yeah,
you know? Like that's what it's looking for. It's looking for
Yeah, you don't want to go. I'm not going to go lend somebody $100,000 if I don't know that they can actually pay me that back in the time frame that we've already agreed upon.
Right.
So it does make sense when you zoom out and big picture look at things. That's a lot of real estate. You just need to zoom out and look at the big picture and stop looking at it in like this very narrow scope.
It's small protections for the greater good.
Right.
In the end of things, you know, we don't want fraudulent things going on, and we don't want, you know, people using mortgages to launder money and you know, stuff like that. So like that's what it's for, so that we don't, you know, I guess take out the integrity of the entire thing.
Yeah.
You know.
That leads, I guess, me into the next portion of this is, when do you have to have your funds? Like, when do you have to have your down payment and your funds for closing costs and all that stuff?
So that is a good conversation to have with your loan officer.
Yes. Everything's about a game plan.
Basically, yes. Basically, it's about a plan in place. So, say you've got 10 grand in the bank
Mm-hmm.
and you need 15 at closing. Where's that other 5 going to come from? How are you going to get it? Are you going to bank your paychecks and save every penny you've got to get there? Are you trying to sell a vehicle? Are you going to get 5 grand from grandma?
Mm-hmm.
There's a lot of ways to get there. And so you don't necessarily have to have all that money right now when you apply.
Right.
That's not entirely necessary. That being said, there's also some discretion with respect to that, right? We don't want you to be needing 15 grand and you have nothing and no plan and no, there's nobody that you can get a gift from, or you're not going to make that much money in the 45 days from when you get into contract.
Yeah, and that's something to think about here is we only have 45 days, and that's actually long.
Typically, yeah.
And that's actually long compared to some states where it's less
is.
than that. It's 30 days sometimes to close. So we have 30 or 45. We're going to start seeing 55-day closes once we get into summertime. Titles move back up, but that's not a long time. It's realistically 3 paychecks, I think, is what it breaks down to.
If you're lucky. And the thing is you'll get that third paycheck, but then we have to get the bank statement to show it in there, and because we have to show it this cash in a bank account. And so it's not like you can just get paid on a Friday and sign on on
it doesn't
Monday.
work that way.
There's definitely some lag in there for the money to hit, it to be actually available in your balance, and then get a statement to show it.
Yeah.
So some things to think about, and we just need to be realistic with whatever that it looks like. And if you're somebody who needs a little bit longer to come up with this cash, well, then that's what we talk with our lovely real estate professional to have your contract written accordingly.
Yeah, realistically, we can write deals out to about 60 days. After 60 days, you want to check in with your loan officer, though, because your rate lock is only good for so long. So after you've gone under contract, your rate is not set in stone until you're under contract, and Melissa does the legwork to actually secure it. And then once she's secured your lock, then you have, how many days is it?
So there are different locks, It can be, you can lock for 30 days, 45 days, 60 days. Some of my lenders offer 90-day locks. So they do exist. They're more expensive.
I was going to ask how much it costs.
The longer the lock, the more expensive it is. And so that's something we can discuss and figure out at the time. If you need a contract for 4 months, okay, we'll do what we got to do. We can float you down. We can lock and extend. There's options that we have there.
A 4-month contract is not realistic.
It's terrible. Don't do that.
I'm putting that out there.
Don't do that if you don't have to.
Yeah.
I've had 4-month contracts before that have come.
Yeah, I can see it happening.
They just needed it. For whatever reason they did.
Off-market ones, I can see
and
that. And
seller agreed. Yeah, as long as everybody agrees, you can have whatever length of time you need.
Yeah.
Essentially. So that's something definitely that we all work together on.
Yeah, to figure that out.
Here's where you are right now. Here's where you need to be. How much time do we need to get you there?
Yeah. And something to think about too is when you're getting into busier seasons, the down payment comes from you and you only. The seller cannot pay for that.
Correct.
The closing costs, though, we can get those covered. But if you're already struggling to get your down payment, and we absolutely 100% have to get your seller credit, it might change the time of year that you end up purchasing, because we only have such a small, nice window here in Fairbanks, Alaska, that we tend to see a really big rush starting now. Yeah. And then it goes all the way through summer. And then normally when school starts, we see it kind of start to slow down. So end of August, but then we'll get another small rush in October. Typically single soldiers coming up, and another PCS season, and they end up here in December. Although I would argue that winter time in Fairbanks, Alaska is always a buyer's market.
Yeah.
I would argue that even if you're looking at the very nice house, a lot of times everyone's going to go after it, but there's not a lot of buyers in the playing fields.
In the winter, yeah.
So just food for thought. If you're already struggling to get a down payment, you do have to have closing costs. We can get a seller credit, but it just might change some things. So, and those are going to change
throughout the
year.
Right.
So I love to get a seller credit. So don't be afraid. Even if you have to look in the summertime,
She's the seller credit master.
Yeah, let me try to get you a seller credit. There's ways to figure it out, but I just like to preface and warn people, it's harder to get a seller credit when we're competing with people because sellers care about their net profit, and that's usually it.
It comes off their bottom line.
Yeah, I mean, what are they going to make? Put your seller hat on and think about it. Anyways, I keep going on like side tangents because it's just...
We can tangent.
That's what we do. This is what our phone calls normally started on, which is what made me think of the idea to do these videos anyways, because we call each other and we just go on these little tangents. But,
right, 100%. Yeah, but down payment is all you.
Yeah.
That is all you. Seller is not allowed to pay that. We cannot have a seller credit towards down payment. So the thing to think about is, depending on what kind of loan program we're going for.
Yeah.
3.5 for FHA, potentially 3 for conventional, 3 to 5% conventional, and obviously VA. You can go 0 down.
And you can't get a line of credit. You cannot get another line of credit to pay for these.
Yeah. I've had people try to pull out like things from their credit card. It's like, no.
You cannot get a loan for your down payment.
You cannot get a loan. Yeah, let's talk about unacceptable forms.
Yeah, unacceptable forms.
Cash is definitely one of them. Pulling out a line of credit. Even with gifts, they can't be a gift from anybody. We have to have some sort of familial relationship here.
Or another type of relationship too.
Yeah. They can't just be from, Joe Schmo on the street. There's got to be some kind of connection. A connection.
Okay, so like what about a coworker, I guess? A really, 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 really nice coworker.
That would be tougher.
Okay.
It's doable, but it's tougher. You can get a gift from your work. Your work can pay.
Right, like our one client, their boss gave them their gift. Okay.
Your work can give you a gift, but there's a clear connection there, right?
Right. There's
versus
a
coworker, that'd be tough to prove. I've
Not
gone
even
on
like your mom one, like your mom coworker, or like your work husband, like, hey, I need 10 grand.
I've gone on some deep Facebook dives to prove like relationships and stuff like that. So, it's just going to be tougher.
Yeah, and if you're trying to establish that relationship, post it on Facebook. And then Melissa will find it.
And I'll go dig around in there. Yeah. See, look, they know each other. Yeah.
I told you, Mom and Dad. Freddie and Fanny, man. Mom and Dad.
So gifts are, there's a little caveat with that too. It's not just from anybody. And that is to prevent, again, money laundering, right? Because otherwise you could just get whoever to just give you this, and they can hide it, and so it's there's some restrictions with respect to that, but definitely no lines of credit. The only line of credit that I can think of that you can would be a HELOC.
Yeah,
you're allowed to use that for down payment if you have an established property and you pull out some of the equity from it. You can use that. However, that does change your debt to income because that is a new debt now against you, and so it may not be beneficial.
Yeah.
And it would depend on what you got going on.
I have 2 comments to say this. A HELOC loan and a home equity line of credit is the same thing.
Yes.
That's what HELOC stands for.
And
there's a little bit of confusion sometimes. People tell me that they don't want to do a home equity loan, but they want to do a HELOC loan. They're the same thing. Yeah. That is what HELOC stands for.
Correct.
But anyways, I think that it is dependent specifically on each buyer on whether a HELOC loan would work or not.
Yeah.
Because I also think that's misunderstood is that you pay it back. It's not a gift like we're talking about. You're borrowing against your home essentially.
Correct.
Taking the equity from it. You do have to pay it back.
Mhm.
It's not something that just disappears, like, oh yeah, here's
Yes.
free money,
Oh
because
yeah, no,
you
you
pay it
owe.
back. You
You
have to
owe.
pay it back until you, sell your home,
Yeah.
and then you'll get the actual equity out of it. But
Mhm.
other than that, I did want to just specify really quick that if you're like, well, maybe a HELOC loan doesn't work for me, but a home equity line, no, it's all
Same
the
thing.
same.
That's what
And
it stands for.
yeah, it just makes me giggle when I read it, because I'm like, it's one of those things where I
Home
tell
equity
people,
line of credit.
did you say it? Did you say it out loud? Did you say that one out loud? I say that all the time, even to myself. I'm like, I said that out loud. I answered my own question. You don't
Yep.
need to answer for
Nope,
me.
got
I
it,
said
yeah.
it. I figured that out really quick. So, I mean, I feel like we tackled a lot about
Yeah.
assets. Is there anything else that you think that we need to talk about? That's like a dire thing.
A dire thing. I mean, the big thing is no cash. Make a plan with your loan officer. Talk about it. It's a conversation I have all day, every day with people. Is like, let's talk about down payment.
Yeah.
Let's talk about what we're going to do for that. What is your plan for that? Because you give me your documents, I kind of look at things, but I don't know what your thoughts are.
Mm-hmm.
Tell us. If you're gonna get a gift, if you don't want to use the funds from your bank, that maybe you have the money, but you
Yeah.
decided you want to get a gift, let us know. That way we can kind of structure things properly.
Yeah.
Right? Be honest. Be upfront and honest, and
Yeah.
tell us, because it is way better to know now rather than find
out later
on down the road, and then we scramble for all this documentation because you thought you could just, I was just going to sell my car. And we're like, oh shit,
Yeah.
we got to go get bill of sale, and
You have to do
all these things,
and your DTI will change.
So please let us know ahead of time what your plan is for down. Don't expect us to read your mind on that. It doesn't do anybody no service to anybody.
No, and there's no harm in talking to the professional early. I mean, if you think that you want to buy in August of this year, you honestly should be talking to a loan officer right now. I mean, especially if it's your first time home buying, you don't know what your credit score is going to be for a mortgage.
Right.
Things are different than I think a lot of first time home buyers also compare to buying a car. That loan is for 7 or 6 years, maybe like 5 to 6 years. You're looking at such a small loan versus the big picture of mortgage.
Far less regulation on a car loan.
Way less. And I think that's also another thing where people are like, why do you need so much? But they didn't. I just got a loan with them. It's like 30-year commitment here. This is longer than probably most commitments you'll make.
And you live in your commitment.
Yeah. Yes.
There's a lot more that goes into it than a car loan. It is just worlds different. And a lot of this was what you were talking about earlier, was from 2008 when we had the housing crisis. Yeah. So a lot of this regulation that came out from that is what we're dealing with now. And it's great. It should be there. It should be in places to prevent that happening ever again.
Yeah, the amount of, I'm sure if you look at the foreclosures in the few years after that, even foreclosures now, we're seeing more that have come out from 2021. The difference between now and then, in my opinion, even though I was literally 13 in 2008, is that we're having this crazy housing shortage.
Yeah. Yes.
It's
with no
rough.
End in sight, honestly.
Not here in Fairbanks, at least. It costs a lot of money to build here with the ship materials, that whole thing. Okay, so on that note, we're gonna end this video right here.
Yay!
Thank you. Like, subscribe, the whole thing. That's really annoying, but I'm gonna do it anyways.
Thumbs up.
Okay, yeah, thumbs up. I'll talk with you guys next time.
Thanks.